So today we are going to be doing analysis on gold. So this is the analysis I'll be doing on gold. First of all, I'll go to my daily time frame, which is this. Then I'm going to circle where I'm going to focus on the daily time frame. So let's know the direction of the market. I'll mark my recent high. Then I'll mark my recent low. Then this is where I'm going to be focusing on the daily time frame. Then after that, then I'll go to my lower time frame, which is the 4-hour time frame, which is there. You can notice that the chart is very big on the 4 hours, not so big, but once you go down to the lower time frame, it's going to be bigger. So this will give you where to focus on once you go down to your lower time frame. So I just want to see the direction of the market, which is if it's a buy or a sell. So now that I'm on my lower time frame, I will mark where market is currently going to on the 4-hour time frame, which is I'll mark out this other block right here. If you notice here, that's where market even reacted from to sell a little bit before going up. So I feel like market will still go up. So on gold, I'll be looking for buy. Then I'll go down to my 1 hour to refine that other block. You see, once I get to my 4-hour order block, it's very big, so I need to refine it to the 4-hour order block. So which is that I need to do a little bit of refining. So on gold on 1 hour, you can notice that this order block on the 1 hour has not been mitigated. So I'm going to be buying this market from this place to this place. But normally, sometimes it can actually break that place because there are other blocks on the daily time frame. So from here now, you can see that if market wants to buy, it will break it because there are other blocks there, but this will be my target for now. So which means on gold I'll be looking for buys. Then I'll go to my 15-minute time frame, which is 15 minutes. Once I go to my 15-minute time frame, I'm not doing much on my 15-minute time frame. 15-minute time frame is just to put my entries for a buy or a sell. So this is how I do my top-down analysis and use my time frames. So here at this point, where I'll be focusing on is currently where the current price is now. That's what I'll be focusing on. So this is where I want to be taking my entry on gold for a buy. Everybody has their own way of analyzing the market. So if you think otherwise, there's no problem. So once I come here, I can see my analysis very clearly. There's a break of structure right here on the 15-minute time frame. On the 15-minute time frame, that's where I put all my confluences. I don't do much. Then I look for my other block below. There are multiple other blocks, but I'm going to be taking this one right here. This other block, I'm going to be taking this other block right. And don't forget that there's another entry below here. There's another entry below here, which means there are 2 other blocks. But some people put anyone you want to take is okay and fine. But for this analysis, I'll be taking the one below just to be on the safer zone. I'll take the one below just to be on the safer. I'll take this one right here just to be on the safer zone. Then this will be my break of structure for that particular other block. This will be my break of structure. Then this other block that I marked out on the this other block I marked out, the first other block, I'll take it as my liquidity to that point of interest. So which means for my own analysis, I'm waiting for price to sweep out this place. Then I will be taking my entry for a buy. You can also tell me your own this thing on the comment section, but this will be my analysis. Then you can refine your stop loss. You can refine your stop loss like under that low, under this low. Your stop loss must be under this low. Then this is the analysis for gold. But if you have your own opinions on the comment section, just list it down for me. So this I'm looking for a buy.
Taking you on Nasdaq. So this is monthly time frame. The first thing first is you have to understand the whole structure of the markets before you know where the direction of the market is going to. So right now, from what we are looking at, we've seen that on the monthly time frame, the market shows that there's a decline from the uptrend markets. You can see this candle. This is a decline, meaning that the market has been bullish till this decline last month. So this monthly candle came back to refill the whole imbalances here. You can see this is the whole this thing that the market came back and refilled, and this is second candle that printed, which is this monthly candle. So this, from what this shows, this middle candle, this is trying to tell us that there is a decline and there is a lot of imbalances in the market, meaning that the next month candle should come back and close the whole this whole imbalances that is here. So that's why I have that notion that, okay, this month we are going to do more of sales than buy. It's simple as that. So now going to the weekly time frame, you see the whole imbalances on the weekly time frame. On the weekly time frame, here it is on the weekly time frame. So if you look at it, this is where the decline starts from. The markets push up. You can see there's no way for the market to go up. So what I did is that I have to go and mark out all the whole imbalances that I have in the market. So starting from this level, starting from this candle, you can see it here. So these are the imbalances on the weekly time frame. So then I'll go down to my lower time frame to spot all the liquidity. So on 4 hours time frame, you can see it's so this is the whole structure on 4 hours time frame. You can see this is where the decline starts from. This is where the decline starts from. Markets push, unable to break this layer. So from here we can have our an order block from here. So before you call something an order block, there must be an institutional level resting on top of that level before you call it. It's not just something that you come to your chart and you'll be marking order block randomly. You don't mark it randomly. So this is down to my lower time frame, and so this is the whole structure that I have on the 4 hour time frame, and this is my order block. See it here. You can see that the market came like 2 times, it didn't break it. We've established that we are bearish at this level. We've established. So now this is where the new monthly candle forms, which is this. You can see this is June, which is this month. You can see this is where it's from, started from. So now I've already established from this zone like this that there is a strong institutional order block that market is finding it difficult to break above. So I've already understand that the whole structure is what? Bearish, coupled with the fact that I still have a lot of imbalances that I marked on my monthly time frame, which is here. They are all resting here. You can see. So this whole thing is screaming sell, sell, sell. So what I'll now do is that I'll go down to my 30-minute time frame to refine my zone on 30-minute time frame. You can see it's very, very simple. The only hardest part of this strategy that I'm showing you guys is for you to spot it. Once you're able to spot it, the rest is, so this is 30-minute time frame. So refining it now, I want to join the sell continuation. I'm not going to be the one that will start the trend. I just want to do the continuation. So this whole thing I just analyzed now is something that made me a lot of money this month. I started swinging this whole structure from here. You can see we have a lot of, you can see once markets create an imbalances that is aligning with what your 4 hours or monthly or weekly time frame is rejecting from, trust me, that zone is a strong area for you to look out for your fair value gap and other block, all those concepts that we learned from SMC and ICT. So you can see there's an imbalances here. So what you just do is that some people make use of their fib to note the CE, which we call consequent encroachment area, for them to enter the sell. So this is it for me. These are the imbalances for me from here. But I love to spot it where there's a breakout block or another block. You can see this. There's another block here. There's an imbalances here. Market just came back here to test it from this point. Market came back to test it from this point, and this is where I got my entry from. So this is where we start swinging the sell from this top. So we enter the sell from here, and this entry was shared live before it played out. So we were able to swing it, the swing trade to this low, right? So this 1 to 5 RR. So market still came back again. We were still able to catch the sell because I already denote the fact that the market is bearish. So now what I'm expecting on NAS right now, because it has already filled the whole gap that I needed it to fill. So right now I will be expecting more buys now because market has already filled the whole imbalances. So where will I be expecting the buys as of next week? So I'll be expecting the market to still come down come down to this point. Let me mark it out. From this point, this 0 point, the balance that market has created. So I'll be expecting this. I'll be expecting this to happen. Then we can start buying next week. So this is my forecast for next month's price action. For BTC, I think I'm seeing more of sales would show. Okay. All right. So from here, I think I'll be expecting more sales from this point, because this is already market is already getting from the breakout block here. So I'll be expecting the sell continuation at this zone. So what do you have for BTC?
This is the daily time frame. So what I will be expecting on BTC is a buy, because market has already stood the liquidity below here. This is the daily time frame, and plus if you can see here, market is coming to this place that you mark as a sell zone. Then we'll be buying this market from here to this place. So once we go to the lower time frame, we'll be looking more on buys.
I think
So anytime the market, as long as market has not reached this zone, we are not looking for sales. The market get to that zone. So this is the daily time frame. I'll go down to my 4 hours. Once I get down to my 4 hours, then you notice that the market is gradually going up, and our target is this order block above here. So what you're going to do is we'll be looking for buys. You know, once you get to your lower time frame, the structure is showing you clear buy structure. So on the 4 hours, we're not doing much on the 4 hours. We already know the direction is a buy direction. So we'll just go down to our 15-minute time frame and put the sell for a buy. I don't do much on this thing. Once you know your direction, put your entry. Once you know your direction, put your entry. So once we get to the entry time frame, what you're going to do is to look for our break or structure. Don't forget, I'm using SMC, so I'll look for a break or structure right here. Then I will look for my order block, and don't forget there are multiple order blocks. Okay, the one you take determines your your entry, your PY. So I'll be taking this one. Some people say, why do you need to take from here? That's my choice. Okay, so if you want to take from here, it's fine, but for me, I want to take from here. There are multiple break or structures. Okay, so I'll be taking mine from here.
so you're not sure you want to swing the buy before the sell happen. You are buying to your sell zone.
The sell is going to take time, okay? Because you know that we mark the sell from a daily time frame, so we have to make sure that you know that we are day traders. We have to make sure that our entry tap within today or tomorrow. We can't just wait for that. So that sell will take a long time before market will even eat. So before then, let's start buying. So this will be my entry for now. So what do you think?
Yeah, same here. I think I will look for buy opportunity from here to this point.
Yes.
So
Till
the
when
long
market
time buy.
gets to that up,
Yeah.
you know that up is very far. When market gets to that up, that's when we'll be looking for a sell price. So what do you guys think? Tell us in the comment section.
All right.